Well, what a rally we are witnessing on the markets right now. A very, very sharp reversal from the lows of the trading session, and those candlesticks and intraday chart will come up for you on the screen on Nifty. There's a solid rally underway, 300 points higher on the Nifty, and a sudden surge that started at around 2 p.m. Or rather just in the last 1 hour or so. And since then, we have seen, quite a bit of rally on some of the individual names. In fact, if you look at the top pullers right now, Bharti Airtel up almost 4.3%. That's contributing almost 42 points to the Nifty up move. Reliance Industries is up 1.5%. 40 points contributed to the move. HDFC Bank up 1%. Infosys up 1%. L&T also doing quite well. In fact, none of the Nifty 50 stocks are in the red right now. It's a sea of green, and how suddenly things have changed in the last 30 minutes itself. Metals as a pack is fairly active, so almost a 2.5% gain coming in on metal stocks. NMDC, Vedanta, Hindalco, Nalco, Jindal Steel. These are some of the names which are up anywhere between 3 to 4%. So definitely shining in the trading session. None of the sectors are in the red right now. Even if you look at the broader market, a lot of vibrancy, apart from, of course, granules, which is down in the trading session. There are a lot of individual buzzers, especially in the EMS arena, the commentary that we heard from the EIL management, some of the semiconductor names. All of this is what has the market very excited today, Aisha.
Oh, yeah, absolutely. And it's not just us. It's pretty much a rising tide phenomena, because look how the handover was from US equity markets overnight, or for that matter, how Asia has actually picked up on that sentiment. So across the board, you've seen a very, very big move actually. I would say we've been a late starter. We should have started off with that 1% kind of gap up, because even periphery markets like Australia have closed in higher by 1%. Japan, what a solid move there. 1,200 points higher for the Japanese Nikkei, 3.5% of a move coming in. You've got Hong Kong as well, which did very well. Shanghai, of course, was a little bit soft. Not just that, look at the move across the European markets. Across the board, you are seeing FTSE CAC DAX hold up by about almost 1%. Heightened anticipation of an ECB rate cut, then perhaps followed by Fed. And then all eyes, I guess, would be on RBI, whether they choose to follow the Fed or not this time. But that said, global markets holding up well, so are we. Bharti is the one which is actually leading today. It's almost a 4% notch up for Bharti, 1600 plus on Bharti futures as we speak right now. Shriram, what a steady ship this has really been. Almost max of, the way an HDFC Bank or a Bajaj Finance were in their heydays. A phenomenal move in the run up to its Nifty edition, and even post that. Hindalco has been a strong performer today. Some of these two-wheeler names have been doing very well. Hero MotoCorp continues to lead, and M&M has made a comeback. This has really been sort of lying low off late. It's back at that 2700 plus kind of level. Metals, IT, like Anisha said, it's difficult to spot any red on the screen today. We'll of course talk individual stocks as well and tell you why they've been making news today. But let me welcome on board Kunal, Naresh, Sandeep Sabharwal joins in on the fundamentals as well. Kunal, hi, afternoon. A sudden spike. I guess we're trying to catch up with the rest of the globe.
Yeah, I think yes. What happened with yesterday in terms of the Dow recovery on an intraday basis. Then today, we've seen many of the Asian markets recovering quite well. I think it was time for our indices to try and play a catch up. Now, the good part about the markets today is that throughout the day we've been managing to just about trade closer to that 25,000 mark, at least in the first half, and then we've seen the index picking up pace by more than 340 points so far, which means now that we are looking at a comfortable support, which is at the 24,800, 850 levels. We tested 2-3 trading sessions back for the index, and the best part is the sectoral contribution, because you have seen very rare kind of a side that all sectors are into positive territory so far. Bank Nifty is leading the charge from the front. I think that should add to the confidence for traders, because when Bank Nifty tries to participate, the moves for the indices generally gets a lot more high beta or more intense. So I think that as anticipation would continue to be bullish on the indices, and 24,850 could be considered as a renewed support for the Nifty.
Okay, yes, renewed support for the Nifty coming in from the banking index, and intense move. That's one way to put it. But Naresh, what's your view apart from the banking index, of course, which is very strong, 500 points higher? Metals are also shining. Specific names out of the banking index and metals that you think will outperform in this rally?
So the first name would be Kotak Mahindra Bank, which is right from the start today is showing some momentum, sustaining about 1800 odd levels. Finally, 1820, 1840 is the next band. If it sustains that, we could be looking towards 2000. So that's the top one on the radar. It's contracted for a long time. Same is the case with HDFC Bank, which has contracted around that 1640, 1650 mark. So if that breaks out, those two names which have been sluggish for a long time could take leadership. In terms of metals, continue like Hindalco, which has been a relative stronger mover in the whole metal pack. So would go with Hindalco in the metal pack.
So that's a take coming in on some of the metal and the banking names. But Sandeep Sabharwal also with us. Sandeep, what a move in the markets. Some would say that they were anticipating it. But what do you like within financials, if anything?
I think markets have been volatile, so markets have been trying to find a level at elevated valuation. So we've been seeing up and down since the last month. Now, this could, I believe, continue. So I would think that before taking any significant bet out of the cash which one has on the sidelines, we should wait out the US Fed decision, which is just 4-5 days, just 4-5 days to go. Because I think the way markets are positioned, if they cut by 25 basis points only, then we could see a renewed possible downturn. And to that extent, we need to be ready for that. So I would think that still tread a bit cautious on the markets, keep around 12 to 15% on the sidelines. But on your question on financials specifically, I would think that the NBFCs would be better positioned than banks at this stage, because in the first down cycle of any interest rate cuts, the NBFCs tend to benefit more because they are bulk borrowers. Their lending is not largely linked to the repo, as in the case of banks, where the first rate cut would actually hit their margins rather than benefiting them on the margins. So, and I think some of the NBFCs could do better than banks.
Okay, NBFCs over banks, that's the word coming in from Sandeep. Of course, you know, a lot of newsmakers as well. You had that 10% block on Honasa. There's, of course, granules wherein the Form 483 observations have really, you know, sort of hammered the stock. It's now down about almost 16%. And then, of course, there's Keynes as well. Nomura has just come out with its latest note on EMS stocks, and it's Keynes which is really, you know, holding up very smartly in trade along with Dixon as well. In fact, I'm going to quickly take it across to Jinay and get in more details from that note. Jinay?
Well, as Nomura have initiated on EMS, they have initiated a buy rating on Dixon with a target price of 15,567 and a buy rating on Keynes Technology with the target price of 59.69. Now for Dixon, what they believe is the large EMS TAM will drive further growth visibility, also catalyst to drive up ramp up in mobiles and IT segment. They believe that the focus on high value addition will support companies' margins going ahead, and they're expecting Dixon to deliver a strong 50% revenue growth and 64% PAT CAGR over FY24 to FY27, and with this mobile and EMS will contribute about 85% of the revenue. Now if we move to Keynes Technologies, they are saying that it's a play on high-tech EMS with an expanding total addressable market. What they say is demand tailwinds will provide high structural growth visibility, and companies' entry into OSAT and PCB business will expand the TAM sharply. Now what they believe is that the company has highest number of diversified customer base, which gives a superior growth and profile margin to the company. Now they're expecting about 56% revenue CAGR over next 3 years, and this does not factor in the revenues from OSAT and PCB. So all in all, a strong view coming in from Nomura on EMS.
Yes, they're quite excited about Keynes, and clearly that stock is up in the trading session. But Sandeep, what's your view on the manufacturing sector, electronics manufacturing at that? Do you think bulk of the rally is behind, or there's still steam in some of them?
When companies go through very significant growth cycles, then at points of time, it's very tough to value these companies because the growth is so high. I think these companies are going through that phase, although their businesses tend to be low value addition as well as low margin businesses, but still due to PLI businesses, etc., they are able to sustain their margins. So I would think that right now the move has been very aggressive, so there should be some cool off. but longer term, the growth story still remains. So I think selectively within this sector, we have to look for opportunities.
Sandeep, stay with us. Lots more stock talk to happen. But after this very quick break, it's turning out to be an excellent afternoon. Let's hope the gains sustain. Going strong still, 1.5% higher, over a 300-point move is what the Nifty is currently sitting on. Bharti now notching 4% gains. So is the case with the Hindalco. Shriram looking very smart. ONGC, M&M. Bajaj Auto, of course, has been a very strong contender today, along with Hero MotoCorp. SBI has jumped up quite nicely, and L&T as well, which is higher in trade. The only laggards, so to speak, are the likes of an ITC, Asian Paints, and only relatively at that. They too are in the green, however, and Bajaj Finance maybe to some degree. But these are a bunch of stocks which are looking good. Kunal, do you sense that there could be a significant catch-up from the Nifty Bank if this market rebound is to continue, or do you think the dominance will remain with IT, FMCG and Pharma, which has been the case of late?
Yeah, so the dominance could probably remain with these large cap names, but the banking stocks are making a very strong comeback. Now, interestingly, on the Bank Nifty, what we are spotting as a chart is a classic inverted head and shoulder pattern. So for the last 1.5 odd month, end of the month of July, start of August, when the Bank Nifty was going through a correction from 51,800 levels approximately towards a point wherein the month of August we tested 49,600 to 800 levels. So this is almost like a 2,000 pointer pattern for Bank Nifty, and now we are on the verge of breaking past about that 51,800 mark for the banking index. These are classical patterns for the banking index, which is getting formed, and after quite some time we are seeing this inverted head and shoulder pattern. This alone could probably take the banking index to back to that 53,500 plus mark, which is about the previous major swing highs for the banking index. So on the back of the strength from the private sector banking names, the recovery or the potential recovery which I would expect from the PSU banking stocks, I expect Bank Nifty to start to outperform from here on.
Okay, the Bank Nifty to outperform, but don't miss what's at the bottom of your screen. We are less than 20 to 30 points away from that all-time high level on the Nifty itself as well. And given the kind of momentum that we are witnessing, maybe in a matter of minutes, so right now it's 15 points, 16 points away. It's a matter of few minutes. It seems like that we'll hit the all-time high mark. And that's been the nature of the market, that we have been consistently moving higher. Today, of course, it's Bharti Airtel which is leading the rally, but not just that. A lot of other stocks are sitting at all-time high levels. Take a look at BLS, Century Textiles, Zomato for instance is at a record high level, Kalyan Jewellers, Shriram Finance, Bajaj Auto, Indigo, Havells, all of these stocks are making fresh record highs as we speak. Sandeep, if you had to buy anything in this market, is it difficult to find ideas because a lot of these quality names are at all-time highs? Or do you think, given the fact that fundamentals are so strong, you continue buying, incrementally some of these names?
So it's difficult to buy because now it's more a time to enjoy what you have, keep some cash on the sidelines, because we cannot be buying and getting fully invested at higher and higher levels. So the point is that the valuations are higher than historical valuation, much higher. Earning growth picture in the last quarter, and as the last quarter saw more downgrades than upgrades. So I think it's not it's a momentum market right now. So this momentum is possible. It could last for some time. So as long as you are reasonably invested, it's fine. But I think for fresh buying, we have to be patient and see if the markets at some stage give us a reasonable correction.
Way now, so seems like we could make it there right now itself to that all-time high on the Nifty. But other than that, the breadth of the market as well is looking very, very strong. While you sure have a few cases like a Granules, Biocon, a Naveen Fluorine, Apollo Tires, which are in the red. There you go. We've already made it. Sensex has hit a fresh record high, and I'm sure the Nifty as well will catch up soon. But metals, they are the ones which are also seeing a renewed vigor. So be it a Hindalco, Nalco, NMDC, all of them are looking very smart. Balrampur Chini higher by 4.5%. There's Canfin Homes as well higher by about almost 5% as we speak right now. But Sandeep, wanted to get your attention in on pharma. Of course, there will always be a few odd cases like Granules. But have you now broadened your exposure within the pharma sector?
Not really. So I think I just stick to the leading companies because the smaller companies will tend to have such episodes like of the company you were talking of. And many of these companies, I have found myself that understanding their cash flows and business models are difficult. So I think for people who can analyze them more deeper, I think they could still be opportunities.
Moving parts and need to be careful. But Nuresh, any fresh trading ideas that you are recommending right now with the kind of market up move that we are witnessing?
So banks is the place where we could see leadership. So in that, Kotak Mahindra Bank looks interesting. The stock has been sideways for the longest time around that 1800 plus minus 20 mark. Today is showing strength, sustaining at 1820, 1830 levels would be an indication of a short-term breakout. That would inch up higher towards 1900 to 2000 possibly. So Kotak Bank it is.
Okay, Kotak Bank it is. The other thing I want to talk about, Sandeep, with you is Bajaj Housing Finance IPO and the kind of appetite and subscription that it saw in the market. I mean, 3 lakh crore rupees worth of subscription. The grey market premium has already jumped up to 100% right now. Having said that, it's way off from the pre-COVID peaks of, the likes of an ICA, etc., or immediately after COVID, and definitely away from those heydays of Reliance Power back in 2008. What is it telling you about the market appetite right now?
I think many of these, because of SBI and all, so a lot of people bid, but actually they don't put in the money. So the money remains in their bank accounts. Everyone knows that the oversubscription is going to be so high that the allocations they'll get will be very low. So I think all these IPO oversubscriptions are more a function of that. However, I think the frenzy for IPOs, etc., is clearly reflected in these numbers because people are willing to put money in IPOs. So no one looks at the fundamentals of the IPOs any longer. So any IPO, just apply because the listing gain themselves will be so high.
But it's a ring of a fresh record high on the markets right now. So Sensex had already surged past that 1,000-point gain mark, and now it's a Nifty which continues to build on gains, and those firecrackers up for you on the screen, because if you're a bull, you're mighty excited and happy right now with the kind of big momentum that we have seen. And the most interesting bit is all of this has happened in the last 50 minutes or so. It's from 2 p.m. onwards that we started seeing the big surge on the markets, and from there we have just continued to build on momentum. Almost a 500-point rally when it comes to the frontline index. Bank Nifty has managed to gain 600 points almost, so clearly doing quite well for the markets right now, and that's clearly the biggest talking point right now in the markets with the kind of big momentum that we are seeing. Hindalco, that's up 5% almost. Bharti Airtel is seeing a gain of almost 4.5%. NTPC is not far behind. You also have Shriram Finance, ONGC, and none of the stocks of the Nifty 50 are in the red. It's all, the frontline index being in the green right now. Even from the banking index, SBI has finally managed to break out of the weakness. At the start of the week, we were discussing how that stock has been a bit on the back foot. A couple of brokerage cuts have come through, but today SBI is clearly powering ahead with that 2% move. Kotak Mahindra Bank, Nuresh, has been flagging out. IndusInd Bank, IDFC Bank, Bank of Baroda, some of the other names. Kunal, what's your sense? I mean, the 3 p.m. move, we wait for the monthly expiry, but today is just the weekly expiry, and that 3 p.m. move has happened even ahead of 3 p.m. It was a 2 p.m. move today.
Yeah, it was a 2 p.m. move. But again, I think, the major part of the chunk of this rally is led by the banking index. There is also evidence of short covering in the metal counters because, we've seen many of the metal stocks, the likes of Vedanta, JSW Steel, JSPL, Hindalco. These stocks have shown signs of very good intraday recovery, which means that what we are now looking at is a combination. So, the FMCG, Pharma stocks, they've been moving up higher on the back of long built-up formations, and the underperforming sectors, metals, banking to a larger extent, and the individual sectors like CPSC, etc. These stocks or these sectors had a lot of shorts built up in them. So now we could be looking at a second round of these indices going through a short covering wave. That I believe could probably be another positive for the overall market sentiment. So expecting a short covering move for these underperforming sectors. Even the PSU banking names which you highlighted, SPI, Bank of Baroda, etc. Even these stocks had underperformed significantly in the last 2 to 3 months. So there could be an ample amount of short covering in these spaces as well.
Okay, short covering. That means perhaps this move can get a further leg up from where we are as well. But Sandeep, if you had to look for pockets of opportunities and something that you're watching out for, does autos come to mind? Any name from the consumption pack? What apart from NBFCs would you want to take a bet on right now?
Defensive sector should continue to do better because at the current valuation. So I think on the consumption side, so the problem is that the rally has been so wide and extended for many of the stocks which we hold also, that it's tough to make a case for fresh buy. But I think the consumption basket or auto four-wheelers like M&M, Maruti, etc. on weakness, all these companies still have a strong long-term outlook.
Bharti Airtel, do you look at this one closely? Would you be a buyer?
Yeah, Bharti Airtel is one of the top holding in our large cap portfolios. We've been holding it since 400. There's nothing negative in that. So we continue to hold. So there's no reason for us to sell because the fundamentals of the business continue to improve, cash flows continue to improve, and as per the projection of some analysts, given the cash flows they are generating in a few years, they could actually end up being debt free also.
Okay, that's Bharti. Of course, a big breakout on the charts. Naresh, let's get a chart check as well. Already at 1640 on the futures. Bharti.
So a very positive chart. The stock has been making higher tops and higher bottoms. The recent highs were around 1610, 1620, which got taken out today. So a clean breakout and more importantly, a large move on a day right from the start. So positive momentum continues. Our trailing stop loss should now be placed around 1600.
Okay, that's the take coming in on Bharti right now. That, of course, has been a very, very strong performer, led by, of course, Metals, Hindalco, JSW, all of them holding up very strongly. But within auto, Sandeep, where does your preference lie? Because, one has clearly seen that shift happen out of PVs, and we've been talking about this as to how, on a month-on-month, their sales have been on a bit of a declining trend, and then, they've had to come out and issue discounts as well. And it's actually the two-wheelers, the rural exposure plays, which are actually picking up now.
So I think that's where we've seen the outperformance also. If you see the way Bajaj Autos moved or the way Hero MotoCorp has held up. So that's already reflected in the stock prices. So obviously current fundamentals prefer these companies. But if you are looking for opportunities to buy, though that has to be on companies which show weakness on temporary negative factors. So I think then we'll have to look for opportunities in the four-wheeler side.
Okay, that's the word coming in on auto sector. Sandeep, on that note, we let you go. Thanks so much for making time and speaking with us. Time now for the closing trade ideas. Kunal, there are too many, I believe, but still, what's the one closing trade that you would recommend?
So I'll go with the strongest name in the financial services name. That's Bajaj Finance. That's a chart which has been looking very attractive over the last 2 weeks. We've seen the stock recovering almost 1,000 points from 6,400 to 7,400. It's now on the verge of a multi-month breakout of this 7,400 mark. So it looks very attractive.
Yeah, and that value unlocking which will happen when Bajaj Housing Finance does lift on the bosses could provide a further fillip. In fact, this is something my colleague Samit had done some number crunching on. We'll get him shortly to discuss that. But before that, Naresh, what's your view on the closing trades?
So that would be a buy on Kotak Bank. The stock has gone nowhere for the last 4 years. Pre-COVID also the stock had made a top at 1750. Whether it was 2020, 21, 22, 23, 24, the stock has been around this band. So it's contracted a lot. Today is the first time it's about to cross a recent swing high, a triangle breakout in making. So if this breaks out, ideally you should go towards the 2000 mark going forward.
Now for a quick break, when we come back, we'll talk with fresh voices and of course Naresh and Kunal to talk to us about what next is lined up for the market. It's 25,400 on the index right now, a 2% move coming in. We were getting excited when we hit the earlier all-time high of 25,333 thereabouts. Well, we've added a solid 70 points from there. If you are a bear, if you had some shorts in the system, we can only say sorry right now because clearly it wasn't the call that the market wanted to take at this point of time. New pin code, perhaps 25,000 or 26,000, sorry. That's perhaps the new pin code and the next pin code that we should watch out for. Bank Nifty, that continues to power ahead, a 800-point move there. The Sensex is up 1,000 point and clearly just building on to gains. A. Bala Subramaniam of ABSL AMC joins us on the show right now, and Jai Bala on the technicals as well. A. Bala, I wanted to begin by asking you, 25,400, we keep on talking about how this is only a liquidity driven rally. Perhaps valuations are very expensive, fundamentals aren't that strong. But what do you make of it? Do you think we can just continue to make, fresh highs and the valuation is not a concern at all?
Interesting, of course, the market is reflecting some element of buoyancy that continues as far as the economic growth concerns. And while that's been the case so far, we must also accept the fact that the last 1.5 months, markets have gone through some bit of consolidation phase. I think the current movement in the market could also be linked to, in some sense, the rate cut expectation that is beginning, which is in the US. And there has been debate about whether 25 to 50 basis points. If that happens, then we'll go to the rate down cycle, contrary to what you have seen in the past rate hiking cycles. And second is, as a result of that, I think some bit of expectation will get set from Indian interest rate as well. But though in our view, we will not see a rate cut coming in India for at least the next 2 quarters, but at least some bit of expectation will get set. And therefore, some element of renewed interest probably I would say is directly linked to the sentiment improvement that we are seeing in the global market. As far as India concerns, I think we have been going through the consolidation phase. I think the quarterly numbers for most of the companies for the first quarter has been pretty decent. And continue to see the momentum when it comes to the question of both government spending as well as the private capex improving. And GST collection is a true reflection of how the economy is doing. For which we always felt because of high valuation, market will go through a time value correction. But I think on and off it comes in. But today's moment, in some sense, can be attributed to what we are seeing in the global market.
Oh, yeah, absolutely. Jai Bala, hi, afternoon. Would you agree with that? Seems like a global rising tide kind of phenomena and we are catching up.
Hi, good to be here after a long time. See, the markets are bullish, but my take is that it's going to get very volatile from here on because, in my opinion, this is part of the very long-term topping process. So what we're going to see is upsides that's something like 5 to 7% from here. And then once that's done, we're going to see a decline of about 18 to 30%, depending on which sector you're looking at. And then once that's done, we're going to see one more move towards all-time highs. So that's the kind of trajectory I have for something like a 6 to 18 months time frame. So be ready to take your profits when you see from here on where a trader's hat, not an investor's hat, and on your core portfolio, which is an investment portfolio, you might want to start booking profits once we see these record highs towards something like 25,600 to 26,000.
Bala, what we're seeing sectorally, and I want you, to come in here, is a little bit of a rotation happening. Money moving out of industrials, the entire capex theme, and getting into IT, pharma, FMCG. Do you see that the rally could now broaden and more sectors could participate? Or do you see significant outperformance from IT, FMCG, pharma, and maybe banks also play catch up?
Yeah, I think interesting trend if you see that clearly we have seen that in the last 3-4 years of cycles from a private sector banks to the public sector banks shift we saw it happening. Then we saw public sector re-rating of public sector as we saw it happening. And as it stands today, if you see from the global numbers, oil price coming to about $70. Definitely all the industry for which raw material is coming from oil related, they will be the large beneficiary of that. That's something we are saying. I think pharma as a sector again have gone through almost 3.5 years of consolidation period. And now having seen consolidation, now having seen build a good balance sheet, now having seen now price stability coming in, now the sector is coming back. And same thing if it goes for the telecom industries and the rural consumption coming back. We are also saying that the FMCG company is coming back. I think some bit of sector rotation is there. And as a result of this sector rotation, wherever the undervaluation was there, that is now getting corrected. At the same time, wherever the overvaluation was there, that is getting corrected in the form of a time-only correction. And definitely that's something I'm seeing it happening. That's one of the reasons why market also is holding on to the broad range with buoyancy continues to remain. So as we put it, like auto, in the OEM side, we are seeing a bit of a dip in terms of sales numbers, but auto ancillaries continue to do well because they are the large beneficiary of the huge amount of sales that has happened in the last few years. And that's something we are seeing it happening. I think that will remain even as we speak.
Sure, so buoyant it is, and clearly the market and the sector churn is at play. But Jai Bala, the kind of sector churn that we're talking about, what within charts would you say is ripe for a bit of a re-rating from your as well? Is it going to be the banking index, because that was one of the big underperformers?
That's right. See, watch the 51,960 on the Nifty banking index. Once that's taken out, it's probably getting ready for fresh all-time highs. But until that point, you want to retain your patience. But from this point onwards, sectorally, you might want to know which sector you want to avoid. From that point, I would say definitely Nifty Realty is an avoid. Also, Nifty Metals is an avoid. So you can be bullish with the rest of the markets. But these are the two sectors you need to avoid. And I've been bullish on Nifty Pharma and Nifty FMCG. But everything is getting quite stretched. And they're all getting to probably an exhaustion point. So be very selective and know where to not fish. That's more important than where to fish.
Don't fish and perhaps just stay with quality. So for instance, realty and metals are two spaces where Jay is recommending that one should look at booking profits. But Bala, if I had to ask you about the sectors that one should avoid at this point of time, are there any names that come to mind?
Not. I think we'll probably see the oil-related sectors could potentially see some kind of re-rating. As I mentioned, that input cost is coming down. That's one. Even the OMC sector itself could be the large beneficiary, and given the fact the crude oil price coming down and the prices remaining stable when it comes to the question of from the consumer point of view. And FMCG, which you have mentioned about, with the rural spending gradually seeing a rise, even the FM sector should also see some kind of re-rating. So that's what we are seeing. And this is again coming from the fact that I think they've also been underperformed in the past. Therefore, some element of pullback is also obvious in this sector because the macro also becoming favorable for the sector.
Right. Bala, the other thing I also wanted to talk about is where is it that you are seeing maximum inflows? Is it largely in flexi-cap schemes, or is it still small and mid-caps which are finding favor?
I think clearly we are seeing flows coming into the large cap, flexi cap. We are seeing increased traction coming in this segment, and as well as a multi cap at this point of time. Those small and mid cap continues to see flows. Definitely the rate of flows compared to what you have seen in the peak versus now, there is a bit of reduction. Also, given the fact that equity market was going through a sideways for some time, there has been a renewed interest coming into the hybrid funds as well. Where the hybrid funds we saw some element of slowdown we have seen, but once again I'm seeing it coming back.
Jai Bala, thanks so much for joining us today and making time on this momentous occasion of this fresh record high. But it's not just the Nifty Bank, mid-cap Sensex which is making fresh record high. A lot of individual names as well. Indian Hotels, for instance, has hit that mark of 1 lakh crore market cap for the first time. So that stock too is definitely in focus. Other than that, Century Textile, Bharti Airtel, Chola Finance, Akims, all of these stocks are also doing quite well. On Indian Hotels, Naresh, what would be your view? A fresh buy at these record high levels on that one?
So it would be more a buy on dips rather than at current levels. The stock has already moved up quite a bit. So for now, it is a stock where momentum is strong. In this case, one can keep a trailing stop loss and ride onto it. But at current levels, the risk reward is not great for a fresh entry.
Right. Before we move forward and even address IHCL, which is also the newsmaker along with the Sensex and Nifty, let's hear out what Atul Suri told us this morning, and he was quite convinced that the rally is pretty much intact, and what we've been seeing for the last 1 month is nothing but just a very, very temporary blip. these volatile days will continue, but the market rally is pretty much here to stay.
My target for the Nifty is around 26,400, which is a good 6 to 7%. So at the moment, I will not be fretting too much about allocation or taking money off the table. There's a lot of angst about that. As far as a sector, I think that, as I mentioned, that we are at least going overweight pharma, and that would be my sectorial pick for the coming few months. But as far as the 3 to 5 year story, I still feel that industrials will dominate. But in short term, there are a lot of places where there is undervaluation, which needs to be catching up. So I think there are going to be a lot of opportunities. I am really not too bearish on the market.
Right, okay. In the meantime, of course, it's not just the indexes, but you're also seeing individual names like IHCL, for instance, Indian Hotels, wherein the market cap has now soared to new heights. It's hit that 1 lakh crore rupee market cap club as well. And by the way, it's the 8th Tata Group stock in the $1 trillion club now. So going extremely strong for IHCL. Kunal, a quick look at the charts. Not just IHCL, but what else is looking good for a buy?
I think, of course, IHCL looks very attractive at current levels of 700. The stock has run up, exceedingly well, consistently well over the last 2.5 or 3 years or so, from 2020 lows closer to 100, 120 odd for IHCL to now 700 approximately. So looks attractive. From the other bets, I would actually look out for the PSU banking lot, and I think stocks like SBI, Bank of Baroda, they would actually look very attractive from current levels. So expecting the PSU banking stocks to get into a short covering mode, as well as more upside for many of these underperforming PSU banking stocks.
Right, let me also welcome on board Pawan Parak as well. Pawan, hi, afternoon. Apologies to keep you waiting, but what a day, right? Both the Nifty and the Sensex at an all-time high once again, or fresh all-time high, I should say, at least for the Nifty. And a lot of stocks actually contributing today. But would you say that you'd be a little circumspect about this rally, because a lot depends on what the US chooses to do in terms of interest rates, and it seems like a 25 bips cut could well be in the price.
Yeah, hi Aisha. So honestly, this kind of rally doesn't really surprise, because I think, as if you look at the India story, India is doing the right things in terms of investing in manufacturing, focus on renewables, focus on new age technologies, electronics and manufacturing and things like that. So directionally, India remains to be a very attractive story. But honestly speaking, given the kind of rally we've seen, and a kind of linear rally that we've seen in last 1 year or so, I must say that stock picking has become really, really very tough. So even in sectors that you really like, there are several stocks which are not really in your comfort zone. And hence, we need to pick up stocks on a bottoms of basis, and, need to cherry pick ideas wherein the risk reward is favorable. Otherwise, it's a tough market as far as stock selection is concerned.
Well, yes, it's getting tougher to find those good stocks at the right price, because everything has turned expensive. But Kunal, your view on the metals pack, because Jay was talking about how you should probably stay away from that pack and profit book, while on the other hand, there are those headlines doing round that China is likely to cut rates on 5 trillion mortgages as soon as September itself. Some banks are making final preparations for rate adjustment, and move may spur household consumption and hurt bank profitability, yes, but the good news would be that demand would come back as far as China is concerned. What's your take on metals?
So I'll be bullish on selective counters in the metal pack. JSW Steel, Jindal Steel. These are two names from the metal pack which are looking attractive. Jindal Steel today specifically, I think, is formed in an inclined inverted head and shoulder patterns. That's an interesting potential breakout candidate. Current levels of 999,000 approximately, and the pattern height is approximately around 45 to 50 points, which means we could be looking at another 5% upside for the stock in an immediate term. Same is the case with JSW Steel. The stock is on the verge of a breakout of the previous highs. 965, 970 was the previous swing high the stock had made in the last 1 or 2 weeks, and I think the stock, looking at the recent mild correction and the immediate pickup the stock has gotten into, I would expect the stock to break past about that 975 previous barrier. So I think if you be selective into the metal pack, there are a lot of opportunities to try and encash on the trend. The only weaker stocks so far in the metal counters are the likes of Tata Steel and SAIL, which are still struggling or just trading closer to their 200 moving averages. whereas many of the other larger cap counters, they are trading close to their life high levels. So I would probably believe that you have to be a bit more specific at current levels. JSPL and JSW Steel are the two names which I would be picking up.
Okay, metals it is. 500-point surge on the Nifty alone is what you're seeing, or actually 330 points right now, 394, still scaling higher as we speak right now. But Pawan, do you believe that now banks also will perhaps play catch up if this move in the markets is durable enough?
Well, I am not so very positive on banks for now, because I think, banks still have to see a credit cycle. Post-COVID, I think the credit costs have remained very benign. I think that we are in a period wherein credit costs is still getting normalized. And add to that, we all know there's this mismatch between deposits and advances. While valuations are very comfortable, I think given that, if deposits don't come up the way it is expected, this could pull down growth. And at the same time, if credit cost starts inching up, we've seen in last quarter where one or two microfinance institutions or one or two small finance banks, when the performance wasn't up to the mark, we saw the kind of reactions that happened there. So considering that backdrop, I would actually wait for at least 1 or 2 quarters to see some stability in performance, some stability in terms of deposits versus growth rebalancing before we actually build up a worried position on the financials or lending businesses.
Pawan, what's the view on Pharma? Because again, a very stock-specific moves today as well. Granules is down 16%, but on the other hand, you have Aurobindo Pharma doing quite well. Of course, IOL Chemicals, etc., also have moved up quite drastically. Within Pharma, what are you looking at, and what looks interesting?
Right. So, that's the nature of pharma sector. One side you would have some adverse observation on one of the factory audits, and on the other hand, you could have another company wherein there is some positive ANDA filing which could actually drive the stock up. I think similar is the case happening in the pharma sector. But having said that, at the macro level, we find the sector to be very interesting, because we feel that while domestic pharma business is a quasi FMCG story, intermittently there could be 1 or 2 months when the growth is a little subdued, but take a slightly longer term view. I think this is a one sector which can, domestic pharma is one space which can continue to compound at 8 to 10%. And add to that, the generic story, the US generic story continues to remain very promising. I think last time, and so when we discussed, I highlighted that most of the companies in this space have got blockbuster molecules in the pipeline at least for next 2-3 years. And next 2-3 years is a good period wherein they can refill their pipeline. So, from a directional perspective, pharma looks very interesting. And I must also tell you that pharma on a relative basis, also is makes sense because it is defensive by nature. So if markets were to fall, I would want to believe that pharma would fall lesser than other sectors. So it makes sense to be overweight on the pharma sector, and so are we.
Okay, that's the take coming in on pharma right now. Naresh, where is it that you think a sectoral move will come? Of course, today everything is participating, but what's looking strongest?
So in terms of fresh strength, it continues to be FMCG and banking. So FMCG has continued with slowly and steadily, and banks could be the surprise pack because we are coming very close to that 51,600 to 800 band, which has been a resistance on the Bank Nifty. And majority of the large cap banks have gone nowhere. The PSU banks are back to election day prices. So they have a case for a bounce back. So you have both the places, one which is sideways, one which is closer to 15-20% off from the top. So there can be a bounce back trade on both the sides. So banks could be the only place where risk reward and momentum is interesting.
That's the take coming in. Okay, that's the take coming in on some of these spaces and stocks right now. But in the meantime, just taking a look at some of the other big buzzers right now. Engineers India has done quite well. But on the other hand, some of these oil companies were coming under pressure, Pawan, because there was this expectation that perhaps, given the fact crude has come down to the level of $70 to the barrel, there is a possibility of a retail price cut. How should one approach the OMCs right now?
If you were to take a 2-3 year view, I think it makes I think OMCs provide a good attractive entry point in my opinion, because even if last 2 weeks crude has fallen, but even if crude was to bounce back, I would want to believe that on the refining side, a lot of these OMCs will continue to make decent amount of margins. because last 3-4 years, refining capacity globally hasn't seen much traction. And next 2-3 years, some of these companies will see addition in their refining capacity. Secondly, I think government over the last 3-4 years has made amply clear that even if intermittently they don't hike the retail price, but eventually they will make sure that only OMCs get compensated for whatever loss they incurred in the absence of increasing retail prices. I think valuations are pretty attractive at this point in time, and if actually crude prices were to hover here, safe to believe that in next 1 or 2 quarters they will make a lot of money in terms of marketing margins. So considering earnings are stable, valuations are fine, I would want to believe that one should actually look to nibble into some of these names.
2 minutes left to go before we wind up for the day. Kunal, Naresh, Pawan, thank all of you. I'm going to hand it over to Snehi to recap what a fabulous trading day it's been.
Absolutely, you summed it up just right. What a fabulous trading day today. The bulls have taken charge today, and how for today's trading session. Let's take a look at where the Nifty 50 is right now, of more than 400 point uptick coming in, 25,347, 350 thereabouts is where the Nifty is, a 1.7% stellar recovery coming in. Fresh record high for Nifty today, and the biggest intraday gain in the last 3 months, and it's taken Nifty all of 8 sessions to inch another record high. Not only Nifty, although the spotlight was on Sensex as well today, 1.6% higher is where Sensex is as of now. A 1300 point gain intraday, crossed the 83,000 mark for the first time as well, slightly receded, but well, another fresh record high for Sensex as well. And not only Nifty and Sensex, you had Nifty Midcap, Nifty Pharma and FMCG. All of these sectors have hit their respective record highs as well. The broader markets gave in some strong support today, both Nifty Midcap and Small Cap up by 1%. You had a whole host of stocks that were abuzz in today's trading session. Tata Steel on the back of that agreement with the UK government. Honasa Consumers was tanking on the back of the block deal. Granules has been the big loser of today's trade after there was some clarification on the 6 observations by US FDA. Bharti Airtel, however, up 4%. Thermax up 4%. Kalpataru projects did very well for itself. Nazara Tech also has been holding on to gains over the course of the day. On the back of brokerages, we have to mark 2 stocks, Dixon Tech as well as Keynes, because very stellar moves coming in of 10% each on both of those stocks, because Nomura has initiated a buy rating on both of these stocks. HSBC on Kalyan Jewellers, also good note coming in. Kalyan Jewellers also held up pretty smartly in today's trading session. You had Jeffries on Cholamandalam Investment, maintained a buy rating, hiked the target price, so very good moves coming over there also. However, what did not do well today was Nykaa in today's trading session. However, the highlights of today's trading session, all your sectors of the Nifty 50 have ended in the green. All Nifty 50 stocks have ended in the green today. Advance decline ratio majorly in the favor of the advances today. And what's also key to note is that the BSE listed company's market cap has grown by 7.5 lakh crores in just one day today. Very stellar moves coming in on the market. It was a clear case of a bull run today. Nifty above that 25,300 mark comfortably, 1.6% higher.